Today, Sam Bankman-Fried back in court after federal prosecutors agreed to temporarily withdraw some of the charges against him. Hong Kong pushes for banks to accept crypto clients. Summit Wealth Partners advisor breaks down what investors interested in crypto should know from Vision 2023 in Austin. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto prices fell sharply after the Fed announced it would keep interest rates unchanged after more than a year of rate hikes. Yesterday, however, the Fed also projected 2 more rate hikes this year. As of noon Eastern, Bitcoin traded just below the $25,000 mark, Ether fell nearly 6% to $1,640, and Solana dropped by more than 4%. Okay, let's talk about some of the top stories. Sam Bankman-Fried back in federal district court in Manhattan today, the morning after prosecutors agreed to withdraw 5 of the 13 charges against him, including bribery, at least for now. In a court filing from yesterday, federal prosecutors said they would proceed to a trial in October without pursuing the accusations that the government added to SBF's indictment in the months after he was extradited from the Bahamas. The withdrawal of those 5 counts was a victory for the FTX founder, who had argued that prosecutors should not have been allowed to charge him with additional crimes after his extradition. But there's a caveat. Prosecutors asked the judge overseeing the case to schedule a second trial early next year on those 5 counts. Next, Hong Kong is urging major banks to embrace crypto exchanges as clients. Today, Hong Kong's banking regulator said lenders in the region were asked in April to try and meet the business needs of licensed crypto exchanges. This comes in response to a Financial Times article, which said lenders, including HSBC, were facing pressure from Hong Kong's central bank. Citing 3 people with knowledge of the situation, the FT report said UK-based lenders and the Bank of China were questioned by the Hong Kong Monetary Authority last month on why crypto exchanges were not being accepted as clients. HSBC has said it remains engaged on policies and developments in Hong Kong's growing crypto industry. That's according to Reuters. The region has been pushing to become a global crypto hub, courting crypto companies in mainland China, among other moves. Finally, Binance's Cyprus unit has applied to be deregistered as a crypto service provider after receiving a license in October. That's according to the website of the Cyprus Securities and Exchange Commission. The exchange previously said on its website that the Cyprus registration allowed Binance to offer spot trading, custody, and other services in compliance with the region's anti-money laundering and counter-terrorist financing rules. We reached out to Binance for comment, but hadn't heard back right away. However, a Binance spokesperson said the crypto company is pulling back on Cyprus to focus on its other companies in the European Union, according to Reuters. This is ahead of the rollout of the EU's digital asset regulations. All right, on to our main story. I just got back from Austin, Texas, where I attended DACFP's annual Vision event, a crypto investing conference for financial advisors. While I was there, I spoke with Jeffrey Janson, a senior wealth advisor with Summit Wealth Partners. He breaks down what people interested in digital assets should know before investing in the asset class and how much of their portfolio should be allocated to crypto. Take a listen. Okay, so I've had some people tell me today that we are in a definite bull market, and some people saying we're still in a bear market. Depends how you look at it. But I do know this regulatory crackdown in the US has really been a dark cloud over the industry, especially post FTX. How are you feeling about the market these days?
It's an interesting mixed bag. For example, with all that overhang, one would expect that the price of Bitcoin, I think, would be much lower. With all this bad news. And yet it's kind of interesting to me, if you look at what has happened with the price this year, it's actually gone up pretty significantly. So I don't know, I think that speaks to the underlying strength of the asset class.
And how are you looking at this asset class? I know in my own coverage, we talk a lot about whether it's a risk asset or if it's digital gold or if it's a venture investment in a revolutionary technology. What exactly is this asset to you that we're investing in here?
Yeah, it's a nascent technology that I think has application for a whole host of things. Everyone is talking about blockchain, and this is the original first use case or proof case of blockchain. I think it's just an exciting asset class that has the potential to do significantly well in a client portfolio. And for that reason, I wanted to learn more about it and to understand it better and to see whether it had application for my clients and their portfolios.
And you actually told me that you were the first advisor a few years ago to get DACFP certification in blockchain and digital assets. How is that helped you and become part of your everyday role? Are clients asking about this more? Are you actually making recommendations
Sure.
in crypto?
Yeah. I would say that when the price goes up, clients start asking, which, if I can just say, if you could do it the other way, when the price goes down, ask, that would be the better way to do it. But it has equipped me for being prepared to have the conversation with them about the asset class, and it's quite a different asset class than other things that they're familiar with. The volatility of it and the massive drawdowns that can happen. If you're not prepared for that, that can be a little unsettling for clients. And so we have some in-depth conversations about it before we make any kind of an allocation.
Is there a typical range in terms of an allocation? I mean, I hear 1% to 3% a lot. Is that sort of what you're working with too?
Yeah, exactly right. And I think you hear that based on the strength of the CFA white paper written by Matt Hogan, where they looked into adding, 1, 2.5%, 5%, and the difference that made in client portfolios over a long stretch of time. And just in a practical nature, if you do, let's say, a 1% allocation, and God forbid the whole thing blows up, that whole 1% would be lost. While nobody likes that in a client portfolio, it's probably not going to end someone's retirement if it comes to that. And yet, a 1% allocation could become a 2 or 3% allocation, and so that could meaningfully increase a client's portfolio return if it comes to fruition.
Regardless of how bullish an investor is or how informed and how up to date they are with what's happening in crypto, is there any scenario that you can see today where more than 3% isn't crazy?
Yes. For someone who is comfortable with the volatility, I think that could be perfectly appropriate. I'm such a person. I don't mind if the portfolio goes way up or way down, because I shouldn't say that. I should say I don't mind if it goes way down, because I've also seen it go way up. And so I understand both the pro and the con of that. And so if somebody can handle that level of risk and go into it with their eyes open and understand that that's a possibility, then sure, I think that would be fine.
So what's the best way for investors to get exposure to crypto?
Yeah, great question. Right now I'm dealing with clients that have accounts at Charles Schwab and Company or TD Ameritrade or Fidelity. And so we're dealing with, custodied assets in a provider like that. And so we only have access to certain solutions that can be held in a brokerage account. Many of those are futures-based ETFs. You've got GBTC, which, all of these options have pros and cons to them. Still waiting on the SEC to approve that spot Bitcoin ETF, but not holding my breath on that.
What do you make of, let's call them crypto adjacent stocks, the mining stocks, or companies like MicroStrategy or Square? Do you go there, or do you consider those completely different things?
No, they're tangential to the industry, and I have done some of those, like in my own account. I think it's a little bit too volatile for client accounts, if you follow those stocks, whatever happens with Bitcoin happens in a multiple in those stocks, either up or down. And so I think the volatility that's in Bitcoin is enough for clients without having to leverage it further with the mining stocks. So I've generally steered clear from those.
What are some of the things that are driving that volatility? I mean, you obviously are looking at this with a very long-term lens, knowing that there will be volatility in the interim. And there's just been a lot going on. We had the banking crisis not that long ago, this regulatory crackdown. There's still the macro to consider. We had inflation data out today.
Yeah.
So what is driving prices? And I know earlier you were talking about this as a technology, so I do want to talk about that as well. But while price is still such a focus for investors, what's driving that, and what should investors be looking at?
Oh gosh, I don't even know how to answer that question. It's a whole host of topics. I don't think it's like people saying, hey, why'd the market do this today? As if it's one thing. It's the confluence of, millions of investors coming together for various reasons. But the major influences, I think, are inflation data, regulatory clarity. When you see banks like SVB fall in hard times, then people say, well, hey, I know that there's this other asset class that's not subject to the whims that happen with these other companies or banks. And so I think even that can have an impact on the price. So I don't think it's just one thing. I think it's the confluence of that stuff and the sentiment in the moment.
So you were also saying that when the price is up, that's generally when you start to hear from different investors. Do you talk to them or have these conversations about the technology itself? Like I said before, right now the price is still the big focus, but all of the other projects outside of Bitcoin and Ether, NFTs are still pretty early, but you hear about big brands like Nike or Starbucks implementing an NFT strategy. Again, still early days, but it's on people's minds. Do you have these long-term conversations with investors about the technology?
I have not had discussions regarding NFTs. I actually think the way that clients will find out about that is through these other programs that you just referred to, and then they'll ask. But I'm a big believer in learning to walk before you run. And so I kind of feel like the base case is Bitcoin. We should probably start there and then add smart contracts and so forth from there. And then NFTs is way down the line.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, so we'll see you then.